Okay. So anyway,
All right,
ladies,
enough of that.
what I would like to talk about today is condo ownership. Um,
Mhm.
as you know, condos can be very attractive choice to many buyers because they're relatively low maintenance, and in some cases, they can be as cheap or cheaper than buying a regular home. However, financing a condo can be a bit tricky.
Well, there are rules that have to be followed, and it starts with your HOA in the community, your condo community. The HOA is made up of all the owners of the condos or villas or whatever makes up this community. And then they elect a president, a secretary, a treasurer. They have a board of directors. And that's who oversees the bylaws, any amendments to the bylaws, that sort of thing. So they're the ones that make sure that people are making their HOA payments. Um, if there's any changes that need to be made, if there's any upgrades to the property, all of that goes through this board of directors and the HOA association that has to have regular meetings. So as long as all those things are in line, that helps us when it comes to financing, because Heather can talk about it a little bit more, but that makes the condo association warrantable. There's other things that they have to do, but that's our basic start.
And I think the key word here is warrantable. And you're right,
Correct.
Heather's going to go into a little bit
Mhm.
of that for us. Warrantable versus non-warrantable, I guess. Well, Heather, how about you explain it, because you're going to do a better job than I will.
So a warrantable condo means that it's eligible for a conventional loan from Fannie or Freddie. By the rules set out, they have to meet all of their guidelines, and that has to be a reasonable risk for both the lender and the buyer. A non-warrantable condo means that it does not follow Fannie and Freddie's rules, which means that you cannot use conventional financing to purchase that home.
You mentioned conventional loans. Now, does FHA, VA, can you get those type of loans for a condo?
You can. VA and
Okay.
FHA both also
Okay.
accept condos. They have their own set of rules that they have to meet. But all financing is going to require the things that Kim was just talking about. That has to have an active HOA. They have to have bylaws. They have to have meetings. They have to have a budget, and they have to have reserves. They're, Fannie and Freddie both, and FHA as well, they all require that each HOA is active and doesn't have any lawsuits against them, and that the buildings are up to date. They don't want dilapidated buildings.
One of the things that they look for is making sure that, all the condo owners are paying an HOA fee every month or quarterly or however it's set up. So whatever that is, that typically covers, your outside maintenance, your lawn care, your snow removal, whatever, that sort of thing, whether it's taking care of the landscaping. But it also, they have to have a reserve and money put away for repairs. Because the association is basically anything on the outside. Because when you buy a condo, you're buying from the drywall in.
Yeah.
Everything on the outside, like the roof, they all need replaced or repaired at some point in time. So that's what some of that money has to be put in reserve. So that's what they're looking for when you say a budget. How much are we spending on the, annual maintenance, and how much are we putting back for when we have to replace a roof, or if something else, if there's a common area and something needs to be repaired or replaced. That sort of thing. So that's part of what needs to happen in their meetings and be in their bylaws. The other thing that they look for is making sure that they don't have a lot of people delinquent on those payments, because if they're not getting the regular money coming in, that could be a problem. And they look for insurance coverage. Do they have enough insurance for liability if somebody would get hurt, or if the roof would blow off, or, that sort of thing. So they're really just looking to not only take care of the homeowner and making sure they're buying a good quality place, but their investment. So, obviously if the HOA can't take care of that roof when it needs to be, everybody that owns a condo is going to be jeopardized. So
Mhm.
so that's why they're not trying to be difficult, but
Right.
Right.
those are the kinds of things they're looking for and why they do that.
Mhm.
And if you're a condo owner, it's going to be in your best interest to make sure that the condos are warrantable, because
Mhm.
eventually you or your family is going to want to sell that condo.
Correct. I mean, for a long time, condos, it was looked at, basically, it was the downsize, you know, those of us that are baby boomers and looking to, not have that maintenance anymore and that sort of thing, we'd be buying condos. So you're selling a home, you've got cash, you would buy it. But that's not always the case. So, being able to finance it's important, especially if you go into some of the bigger cities where condos are pretty common with
Mhm.
the, I don't know, are we Gen X now, Gen Z, whatever, but,
Yeah.
the
Millennials,
younger,
they like their condos.
exactly. And they're great. If you are not one that wants to go out and work in their yard and you don't want to have to worry about snow, or you're only here 6 months out of the year, you want to know your place is taken care of, condo's a great option.
A lot of buyers and sellers don't realize that financing a condo can be a little bit tricky, and there's things that need to be put in place before, a lender is going to finance on them.
And as a real estate agent, we all need to know, what to look for and
Yeah,
what to
right.
ask for. If
Mhm.
you're listing a condo and you don't ask the questions, are your bylaws up to date? Have you had regular meetings?
Right.
Who is the president? Who's my contact? So when we do need this information, how do I get it? All of that's information is good to know if you're listing a condo.
And you
Yeah.
need to know if it's warrantable or not so that you know
Right.
how to list it.
Exactly.
Let's say a condo is not warrantable. What are the options for the seller? I mean, other than a cash offer,
Mhm.
is there any type of financing that will lend on a non-warrantable
Mhm.
warrantable condo?
Sure. You'll have some of those smaller banks or your, in-city banks that will do something like a portfolio loan that they keep on their books in their
Mhm.
bank that they don't sell on the secondary market, that,
Mhm.
they'll still finance on that.
I can imagine the interest is going to be a bit higher. They're taking more risk.
Yeah, I'm sure that
Yeah.
it probably is. We don't do anything like that here. I don't do anything that's not warrantable.
Yeah.
No, it's going to be your smaller local banks that will do something in-house.
Yeah.
Right. Gotcha. Okay.
Yeah.
If you're a condo owner, I would strongly urge you to find out, about your association in your
Mhm.
community, to make sure that, where you're living, your condos are warrantable. Because
Mhm.
like I said, there's going to come a day when you or your family are going to want to sell that condo, and it can be an
Right.
issue.
An active association is going to send out minutes from their meetings.
Mhm.
So, even
Right.
if you do not participate yourself, go to meetings, that sort of thing, they send out meeting minutes so you know where things are at. And part of that is like an abbreviated financial. So they um, maybe not who's delinquent, but that there's delinquent funds, or if there's um, plenty of money to replace that roof, and making sure that part of your dues are going toward that. So
The reason that's so important is these lenders want to make sure that their investment's going to be taken care of.
absolutely.
If there's a 20-year loan on that condo, they want to make sure that that condo is going to be, in good condition in 20 years from now.
Yeah,
Mhm.
and the big difference is between that and me buying a house is I'm in charge of the house, but when it's a condo, somebody else actually is in charge of the building, the structure.
Right.
So they want to make sure that, it's in good hands.
All right. Heather, if someone wants more information on getting a mortgage for a condo or for a house, how do they get in touch with you?
They can reach me at 517-462-8811, or they can contact any Howard Hanna agent and they can give them my phone app and they can reach me from there.
And Kim, if someone is interested in becoming an agent with Howard Hanna, how do they get in contact with you?
Well, I'd love to talk to them, and my number is 419-966-6000. Or they can stop in any of the offices. Somebody will give them my card and direct them my direction.
Okay. All right,
All right.
ladies, thank you very much. And I
Thank
will
you.
talk to you both in a couple weeks.
Sounds great.
Sounds good.